Welcome back to this week's market update. Today is Monday, June 1st, 2026, and we'll jump right in. Equities continued their climb during the last week of May, supported by strength in technology and AI-related names. For the week ending May 29th, the Nasdaq Composite led with a almost 2.4% weekly gain, followed by the S&P 500, which rose more than 1.4% and extended its winning streak to 9 consecutive weeks, while the Dow Jones Industrial Average rose 0.9% last week. Moving into our economic data from the week, the Federal Reserve's preferred measure of inflation, PCE, rose in line with expectations in April. Headline PCE inflation increased to 3.8% year over year, its highest level since May of 2023, while core PCE, which excludes food and energy prices, rose a more moderate 3.3% in April. On a monthly basis, headline prices increased 0.4%, while core prices rose just 0.2%, with some softer monthly readings potentially suggesting that the pace of inflation may soon stabilize, as energy prices remain elevated but are no longer increasing as rapidly as they did in March. On that same note of inflation, just taking a quick look at where gas prices sit currently. This is as of Friday, May 29th. You can see gas prices were down ever so slightly on Friday for the day, down about 3.5% on the week, up 3.8% on the month, and then obviously the most severe change there being up 38.6% from a year ago. Now, these are still elevated energy prices. However, the pace of increase in energy prices has slowed, and that should be a force for good in the inflationary metrics. Continuing on in our week, we also got some important data on personal income spending and savings rates for the month of April. Personal income declined 0.1% during the month, while personal spending rose 0.5% during April, which led the personal savings rate to decline to 2.6%. Now, breaking down this change into categories, you can see the number one category in the monthly increase in spending was gasoline and other energy goods. So even though we are seeing the pace of inflation moderate in energy prices, it's still taking up an increasingly large share of consumers' wallets. You can see that spending was up almost $29 billion in a single month. Consumer confidence moved lower in May, driven primarily by weakness in the present situation index, while the forward-looking expectations index did continue to trend slightly higher. Consumers' assessments of current business conditions and labor market conditions became moderately less favorable compared to the prior month, though this was partially offset by small improvements in expectations for business and labor market conditions over the coming 6 months. Income expectations did weaken during the month as the share of consumers anticipating lower income growth increased, and that would be coincident with the data we just took a look at in the previous slide in personal income. By demographic group, confidence improved among consumers between 35 to 54, while younger and older consumers both saw sentiment trend lower. By income group, higher income households continue to show higher confidence, with views supported by elevated asset prices. Overall, consumer confidence remains relatively subdued. You can see in both the expectations and present situation indexes, although we are getting slight improvement in the forward-looking expectations index. Last but not least, taking a look at the second revision to first quarter real GDP growth. Looking at the data here, we did have it initially come in at around 2%. It was recently revised lower to 1.6%, and this largely came down to downward revisions in consumer spending as well as business investment, while government spending, exports, and imports were relatively steady. Now, although this was a downward revision, the fact that consumer spending, investment, and government spending are all positive during the quarter does show some signs of stability for the U.S. economy. That concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.